This is David Patrick, Fitzstock Charts, a market video update for January 3rd, 2019. We are in a 17-day uptrend. We need a V bottom, a witch hat bottom. We've gone straight up with zero pullback. We rested for a few days, went sideways, touched the 10 SMA, and are starting to rip higher. And we are getting paid fat again on just trading rules of engagement. Don't pick the tops. Just ride the trend. There's so many people out there trying to pick a top. They were saying the market was overbought 7 days ago. And those average traders missed the whole uptrend and are trying to fade the market. So not only did they not participate, they faded and lost. Trying to outthink things. They're trying to be smarter than the market. You don't have to be. You just have to ride the market's trend. And we can ride it with the rules of engagement and the historical chart pattern comparisons. We're looking at a couple of historical chart pattern comparisons that are still bullish. We'll get to those. It's earnings season. We got a ton of earnings coming up with tech. So it's going to be very interesting. We're going to look at the 5-minute rules of engagement. And the focus of our service is what? Every single day we have new stock setups. You can trade it with stocks. You can trade it with the stock options. Our engagement spreadsheet focus list. That's our focus every single day. That's why the 90% club is up to 972 different options that have doubled from that ESFL. 265 triplers, 29 options, 2019 options that have doubled, some tripled, some up almost 300%. So it's a simple methodology. Use it. Let's get into a couple things. I got the QQQ up, but we have to talk about that in a moment. But I don't know why this was not up, but let's look at the weekly time frame. That is our highest time frame that we look at. And what is it telling us? Well, let's magnify it and see what we got here. Scroll back to right there. All in long from November. Why? Break of a downtrend line on a weekly chart, highest time frame. Above the 10 SMA, bull flag above. All stars are aligned. Stayed leveraged long the whole way up. Went all cash here on a break of 2,900, broke the uptrend line. Allocated about 40% long risk exposure early in this 17-day uptrend, and went not all cash, went 90% cash up in this area. Now, today, I've allocated some more long risk exposure. I have to emphasize this. The focus of the service is our engagement spreadsheet focus list that comes out every day. It's not my trades, but I post my trades. Not everybody's risk profile and trading time horizon is equivalent to mine. I would probably say nobody's is. So make sure you're trading your individual risk profile, your own trading time horizon. Let's change the time frame here and go to the daily. I don't want this to be one of those 30-minute videos. I want to go over things fast and precisely. So there's all cash. There's 40%. We're at a 17-plus day uptrend. We've looked at some historical chart pattern comparisons to the 1956, 2001, and obviously this is our current market. You can see this is like an elongated bull flag, and this is the diamonds with price target at the 200 SMA. Back in 2001, you get elongated bull flag. We went much higher. Back in 56, it got choppy, dicey. We eventually made it to the 200 SMA, grinded a little bit higher, and then rolled back over. And we don't know which one we're on pace for, but we knew that all of these scenarios were bullish in the short term. And all of them are calling for the 200 SMA. 200 SMA is at 2741. So I would say our minimum price target is 2700. And if we get up here, probably be scaling again. Okay, so let's go over a couple things here because someone had a good question the other day. If you scale plus 1%, plus 2%, you only have a quarter of your trade on, and your losing trades will counter that. So it's a great question. I want to address it real fast with a video. So if you get long, I gave an example on Twitter. If you get long 100 Apple calls, let's just say this is Apple. You get long 100 Apple calls, scale, right? So now you're down to 25 calls. After you've scaled, you wait a couple days to see if it bull flags after our last entry and after you've scaled. Well, let's just assume this is Apple. If this is Apple and you scaled to 3/4, I'm trying to draw here, that's a bull flag. So you've scaled, you scaled. So now you have 25 calls, you had 100, right? You double. You double up your runner to 50 and you let this thing roll again. And then you scale again. And then you raise your stop. So the methodology works. We have huge winning percentage over 75 win-loss ratio, 0.750. But with that said, over 970 stock options that have basically doubled, some tripled or quadrupled. But as far as the scaling method, that works too. But you have to be able to add on price strength confirmation after you're scaling. And we'll go over a few more examples of that if we have time at the end of the video. But anyway, where are we right now? Well, we know our price targets. So let's see what the NASDAQ's doing. And let's get to something real fast here. So before we get to that. So my last trade, I don't like to spend too much time on my personal trades because I don't want that to be the emphasis. So someone asked me, why. First of all, I went 90% cash. I'm long some preferreds, which you know about from the Twitter posts. But with that said, I booked most of my profits on the year. We had 11 uptrends last year, and we had an uptrend for 17 days this year. I like to reward myself. I'm really high stacked on the year with profits. I don't want to give a lot back, but I also want to keep participating. So how did I do that today? I bought some call options. So let's just get to this trade before we get to the rest of the market and dissect it real fast. So first of all, let's look at the TQQQ because that's the first one I said. I said in here, I think it was right in here. I said if TQQ gets above here, this candle's high is 43.45. Someone said, well, why do you like that price? Well, I posted because this Fibonacci retracement from there to there is this line right here. And then it would be above that candle side too. So I'm comfortable with that. Now, so far the trade hasn't worked. Okay. Now, before that trade engaged, I was trading the Qs and I posted that. I said, you know what? We have rules of engagement here. I'm not going to wait till we get over there. We're back above the 10 SMA. I got long. I scaled, and in here I scaled the rest of them. So I got all the QQQs that went out. Why did I get out of the trade? Well, I noticed that as the QQQ did pay me, there was other indexes that were outperforming. So although I liked the NASDAQ's action today, the SP 500 was hitting new highs during that time. So I got out of the QQQ for a trade in some of my accounts. Well, actually, I'm not in QQQ at all anymore. And allocated those profits to spider calls. Okay? So let's get to that real fast. So I think somewhere in here, when this was hitting highs, I say, hey, I'd rather be long with the profits only. You're risking the house's money. I'd rather be long spiders. They're stronger than the Qs, right? So you get long spiders, and that paid, and you could have scaled with that, right, in here. It's a nice little move with options. And then what I turned around and I sold the 260. I think I'm long. Let me just look over here. Let me see. What am I long? 264s. 264 February's expired 16 days. So I wanted to collect some premium just in case we came back down. It shook me out. Although I allocated profits here, I don't really want to give a lot of the profits back. So the way I do it, and you see me do it a lot, is I'll sell something against it. So the 265 and a halves that expire today. So sold those for 33 cents. So I get long options here. I sell calls up there. Right, so it's a calendar spread. So I'm long the ones that expire in 16 days, short the ones that expire today. Try to collect 33 cents times how many contracts I have in premium. And that hopefully expires at zero. And I collect XYZ dollars in premium. If it doesn't, and we would go through this, I could sell the whole spread and still make money. Or buy these back and sell the February monthlies to hold on to my 264s with a regular call spread, not a calendar spread. I know it's a little bit complicated, but the bottom line, it's a directional trade. It's a directional trade that I allocated profits into because the spiders or the ES was stronger than the trade I was in. And I want to be, if I'm going to trade an ETF, I want to be strong, I want to be long the strongest ETF. Now, getting back to the original TQQ, this one has not worked out yet. And it's just another trade versus defined risk. It breaks lows of the day, you get stopped. If it breaks the new high or highs on the days, maybe scale some. Every trade is allocated equivalently in uptrends. You don't have to trade the downtrends. You do have to preserve capital. We haven't been in a downtrend for a while. Before we get to the rest of the market, this was a sustained downtrend. We hit this out of the park looking at a couple historical chart pattern comparisons. I believe one of them was, 2008? We had two historical chart pattern comparisons that told us we were going to melt down. We capitalized on that. Now, you could have bought puts from the ESFL. Let's see if I can pull that back up. Look at all these puts that engaged. So you could have shorted the market and got paid fat with all that, those shorts, the red ones. And you can see some of those are up 300-400%. Or you could have went to cash. You could have stayed cash from 20 and 100. You could have went cash there. So just using price trend, market trend, and rules of engagement, whether you're betting on the downside or preserving capital, you don't have to participate on the downtrends, but you do have to preserve your year-to-date gains in your cash. So this is where we are in the ES. So let's flip to, we looked at the NASDAQ, look at the SP, let's look at oil futures. Decent, this is the head, left shoulder, right shoulder. I think this thing gets to $60. So oil futures look pretty good. When we look at the ETF XLE, it's lagging, it has the witch hat bottom. It's just, we're not seeing any price strength confirmation. It's just falling asleep. We'll look at some stocks in that sector. IWM looks like the rest of the market. Dow Jones, that DIA is hitting that, or coming close to the 200 SMA, which was our price objective. So we'll see how long this lasts. We can't pick the tops. Gold, someone had mentioned gold. Yeah, we've mentioned this for 6 months now. Gold, W, V bottom. We saw it happen in Apple back in 2013 when we launched the service. And this thing paid. And now you have the golden cross, the 50 through the 200. So if it does come back down, it's probably going to get bought. It's coming into some gap resistance up here, 125, 126. It's a tough new trade. But yeah, this elongated bull flag right here erupted, and you could have been long from 122, and you'd be scaling up here. I don't think I would be chasing gold up near its 6-month highs at this moment. What's our bonds doing? We had mentioned once they peaked here, they could come down here. They never really made it back down. And yeah, they're bull flagging above a downtrend line with MACD getting ready to cross. So it's interesting how the stock market's rallying, bonds are rallying, gold's rallying, all asset classes like that rallying is interesting. We're going to see how that works out. All right, so Apple reports earnings. They posted after earnings. They said, let's see if we can pull it up. I said this one has, this one has legs, actually gapped up right in here. About 159. I said this one's got legs to 165. Well, it basically hit that price target in after hours. And by the way, you could still use, if you do trade, I don't prefer to trade after hours, but if you do, same methodology, right? Same methodology. We just talked about break of a downtrend line. We just saw right here. All right, break of a downtrend line. Bull flag above that downtrend line. MACD and multi-day highs. And 160 to 165 is a nice chunk of change if you are day trading in after hours. I don't prefer to do that method, but it just goes to show the methodology works really on all time frames. So yeah, we're hitting that 50 SMA. We talked about Facebook and Apple and some of these other names are going to set up swing long in 2019. And we'll look at Facebook in a moment. But we're spot on with that. I don't want to call it prediction because I don't like to predict, but it was a thesis based on historical chart pattern analogs that we were looking at. All right, Amazon, sandwiched between the 50 and the 200. There's nothing new to do there. BK booking. I don't see too much. Expedia. Everything's getting pretty flat here. Tesla, very sloppy price, really in a trading range. Roku. This one engaged up here. It paid very briefly, and now it's just grinding. And you can see when you're sandwiched between moving averages, you don't have as enough. Remember when this thing had momentum, bull flag up here, and it's just breaking out? It's when you're sandwiched between moving averages, it just slows the trade down. And that's why you have to scale. And I posted that on Twitter the other day. You have to scale these. All right, here's NVIDIA. We had a nice long here, break of a downtrend line, came up here, failed. And I anticipate that this possibly could happen with Apple like it did with Facebook too, where you come down here and then you create the bottoming process. head, left shoulder, right shoulder, or maybe it comes down here, double bottom, and we get a WV. We don't know which one yet, but I still think this is one of those that's going to be bottoming. Here's Facebook, and let's see here. I mean, it managed to bull flag above the 50, and now you're sandwiched in between. So we just talked about Apple. We talked about NVIDIA, and we saw a couple, the bottoming process with TLT and gold. So with Facebook, just like we saw with Apple and the rest of them, yeah, you can make a case. This is a double bottom, or maybe it comes down here and creates some. Let the process happen. Wait for this 50 SMA to start curling up, and then we're going to see a golden cross. Facebook, this should happen. Apple, this should happen. But once again, Apple has the 50 SMA heading straight down, which means probably it's going to break above it to get all the stops out and come back down and give you a better opportunity at some point to get long. So just be patient. At this point, yeah, Apple does have rules of engagement. And yes, it's after earnings. It's bull flagging. I'm just saying your price objective is probably 165 to 170. 165 is already hit. So just have realistic price expectations for these trades when they're below or sandwiched between key moving averages. Let's go through the rest of them here. Intel, Texas Instruments, I don't see too much. Micron, AMD, I don't see too much. Avgo doesn't look too bad. OLED. This one's taking some time. That is a double bottom, and maybe it comes down here, creates a V as we see a golden cross 50 through the 200. Some of these just need more time to set up for a nice bottoming process. Microsoft, no leadership there. Oracle continues to grind higher. I do like that one. Adobe, falling asleep. Coop, bull flag. I like that. Now, I like this one a lot, actually. This is a break for downtrend, elongated bull flag, and this one looks like it wants new highs. We're keeping an eye on that. Got to pull up when earnings are, too. CRM, break of an uptrend line, bear flagging below. There's just not a lot of puts or shorts paying right now, and that could change at any point in time. If it shows up on our spreadsheet short or an uptrend, recognize that's a counter trend trade. And if it's a counter trend trade, it definitely has lower odds than our normal trades. So stick with the uptrends. Once again, going back to you don't have to trade bear markets, you don't have to trade downtrends, and you don't have to trade shorts or the puts. Stay away from those for the most part unless you're an experienced trader. Okay, CRM. Let's see what else here. Splunk. I do like that one. Jobs, grinding sideways. Team. This one's taking some time. It really needs to get back above 96.5, and I think it will see some momentum. We talked about Facebook. Google, I think, still sandwiched between. Twitter, grinding nowhere. Let's get to some of the China names. Baba. This one's, it's just massive. And this is the bottoming process that we just talked about. Double bottom. Maybe it comes down and drifts, creates a V, and now it's going to explode. So don't chase it up here. It's already engaged off of ESFL. Those options, let me see. Scroll back up. Baba, February calls are up 113%. I think they're up more than that right now. I'd have to update that spreadsheet. So that one, it's just, once again, it was based on a historical chart pattern comparison, based on our rules of engagement, and you got paid. Workday, don't see too much. Cena, JD, YY, TES, flying through a lot of these. Sohu, WB, Wuba. Don't see a whole lot of setups there. Shop, Momo, Box. Yeah, it's very slow. Wix, GoDaddy, SQ, very sloppy. All right, let's flip to the banks. JP Morgan still looks like this is a V bottom or possibly head and shoulder, inverse head and shoulders heading to check 108, 109. That still looks like a pretty decent setup. Goldman Sachs, Bank of America. Holy God, Citigroup. That is a huge thrust higher in Citigroup. The banks are alive. And by the way, FAS, getting back to home run trades, those calls on FAS are, I think, close to 300%, and I do think they will get above 300%. That sector is absolutely flying. Visa, MasterCard, don't see too much there. PayPal hit new highs the other day. It came right back to the 10 SMA. Some of the exchange stocks, ICE, yeah, slow. CME, okay, let's talk about CME because, once again, although we've batted over $7.50 since we launched service back in 2013. This was a bust. And before we talk about it being a bust, let's just look at that CME. 1, 2, 3, 4, 5. 5 times. We've doubled our money or more 5 times on this these options. So this last trade, we have a break of a downtrend line, right? Bull flag above. Looks pretty good, above all the key moving averages. Guess what? It didn't work. And that's what happens. That's what happens. That's why I emphasize risk management is everything. Because if you're all in on this trade, if you've made money on all your trades and all of a sudden I'm going all in here, you got busted out, right? So if you get long up here, you're a day trader, you get stopped out early. You're a hybrid trader, you get stopped at the previous day's low. If you're a swing trader, you get stopped at the ESFL entry. No harm, no foul, right? Once again, if you're batting 750 or more and you're adding to your winning trades, you have to manage a trade that doesn't work. And this is a case in point. This CME last entry did not work. Okay, let's fly through, let's see, cannabis, CGC, bull flag above the 10 SMA. You got some gaps here. This is probably going to slow down. I'll tell you what, if it does one of these, and then we see price strength confirmation, this is going to set up again. We talked about this down here, break of a downtrend line, bull flag. This one paid fat, and I probably would wait now to see how it deals with the moving averages here. Let's look at a few other names here. We looked at Docu. This was also one that paid from the ESFL. Break of a downtrend line, grinding higher, coming into some gaps. That one paid really nice. Look at the energy stocks. COP, nothing. PSX, actually looks pretty good. Elongated bull flag. I think if we can get back above 95, this starts to get some momentum on the upside. CVX, come on. CVX, that's basically a witch at bottom and a wedge. There's really no price momentum there. ExxonMobil, how about one of these stocks like this one? This was the worst stock going to the best stock. It's bull flagging. Really need to see some price strength confirmation because they're grinding sideways. The longer they grind sideways, the more vulnerable they might be to some sort of pullback. And if they start pulling back, we'll start looking at some Fibonacci retracement levels. Amgen, wow, very sloppy. An MA topping pattern, possibly. You have to watch out for this name. If it gets below 179, that could get ugly. Guild, elongated bull flag. It is below the 200 SMA. It's not an A1 setup. Jazz grinding lower. Vertex coming off old highs. REGN. Still probably the strongest stock in that sector is REGN. That does not look good. What's that? Aluminum? Yeah, that looks very bad. That looks very bullish, and that could be setting up short. ISRG, not doing too much. So that sector looks pretty boring. Actually, some shorts that are setting up. When, you know, back a few years back, when I was all in the market long, I had JP Morgan and Win on some pretty decent sized positions. They came from some bottoming formations like we've talked about over and over again. And this one's happening again with a WV bottom on Win and just grinding higher. So I think 130 seems to be in the cards with Win over the next month or so. X-ray hitting that 200 SMA ALGN. This is an interesting candle here. And if it gets back above 230, it could be setting up long. So we're about 24 minutes long into the video. We've talked about the rules of engagement. We talked about higher time frame. We talked about the smaller time frame, the 5-minute rules of engagement. We talked about the ESFL, and we talked about market trend. So that's where we are right now. We know our price objectives. Please continue to trade your own individual risk profile. Use the rules of engagement. They work. That's all I have for you. Have a great day.